All
All
right.
right.
Hello, everyone. My name is David Horn, and I am the CEO of Prime Haven Capital. Along with me today, I have Mickey Donatelli. He is our Chief Strategy Officer, and we're going to uh, give you episode one of our podcast from Prime Haven Capital: the truth about private money, who we are, what we do, and the scams to avoid. So, Mickey, why don't you go ahead and introduce yourself and who you are and what we are?
All right. Well, my name is Mickey Donatelli. I'm the Chief Strategy Officer here at Prime Haven Capital. Who we are is we are a consulting firm. We help people get their projects to the finish line. We have a lot of private lenders. We have a lot of hedge funds, family offices. Uh, to get things done, we are connected with a lot of people with private money and hard money lending. Uh, and we can help you restructure your loan if need be to help it to make it appealing to the investor so it gets through the first time instead of coming back and saying it can't be done because of this. We like to help people structure the stuff the right way because we know what the private industry is looking for documentation in order to get it done.
Exactly. Yeah, and I come from a real estate background. My father, Matt Horn, is a real estate broker of over 30 years of experience in the Los Angeles area, and I've been in the private lending industry for a few years now. So we just wanted to come on here and really break down the scams and give you some insider knowledge on private money and why it is faster and better than using a bank for real estate investing. And biggest thing is private money is only for investment properties and business purpose loans. It is not for personal mortgages, HELOCs, anything like that. And you cannot leverage your personal property. But Vicky, why don't you give a little bit background on yourself with the military and everything else?
All right. Well, my background is I served in the military for 18 and a half years. Uh, my background, I've done bodyguarding, I've done security, I ran two of my own businesses, uh, and I got into the private money industry a little bit before David found me. And I've been with David now in the private lending industry for over a year now.
Awesome. Yeah, we've been working together for a year now and building this. And what we are doing right now is in the next couple weeks, we'll be launching a book, which is more of an intro to private money. That way, new investors and everyone else can know a lot of it's about scams and insider knowledge, how to structure a deal, underwriting, everything like that. And then shortly after that, we are going to be launching a course for newbie investors as well. That way, we can educate everyone and give you all knowledge at everyone so everyone can start real estate investing because it's very important. But today we're going to be breaking down the two biggest scams that we do see in private money, which is 100% financing and giant upfront fees and application fees. And just showing you that you don't really want to go after max loan to value and everything like that. So we'll start it off with um, basically the 100% financing line. So, Mickey, why do lenders don't offer 100% financing, and why is that dangerous to new investors?
Okay, well, 100% financing is usually that is a ploy to get you in the door. If you read the fine print, it will say up to 100% financing, or it could be 100% financing. But in the private money industry, 100% financing is very hard to get because in private money, they want you to have some skin in the game. Okay. They want to see what you're bringing to the table. If they got to fund your project 100%, okay, then it's really not your project. You got no skin in the game. You're asking for somebody for $50 million to do a multi-family project, and you're asking them to put up all the capital and take a huge risk that you're going to complete it. If not, they're stuck with the land or partial of a building if you don't pay back the loan. They want to make sure that you got something invested in the project itself. If it's your project and you believe in it, then you should be able to put at least 20 to 30% into it. You know,
Exactly.
and they're going to come in and give you the rest. Okay. When they mention 100% financing, my first question to them is how are they getting you the 100% financing? How are they closing costs being covered? How are the points being covered for your broker or even the lender's points? You know, how is that all being covered? You know, that is not coming out of you, that's coming out of your pocket. You know, and most of them that offer 100% financing, when you get down to the close, it's not 100% financing. And they will come up with an excuse saying why it's not 100% financing, because they just want to get you in the door.
Everybody wants 100% financing because it's free money, but that's not the truth. And the truth is, if someone is offering 100% financing, it's most likely a scam. We had it with one of our loan officers, Adam Howard, where we had two people that were going to do fix and flips with us, and they chased after an ad that said 100% financing. And a few days later, they came back to Adam and said, "We got scammed, and now we don't have any money to do the project," which is what's going to happen because they'll lure you in with 100% financing, and then there'll be some upfront fee. It could be $2,000, or it could be $10,000. But once they lure you in, and then you wire that fee, then they're going to ghost you, or just stall you out with fake term sheets or fake acceptance letters. That way you just keep going, or they're just going to disappear itself. So Mickey, how often have you seen this in the industry and everything like that?
I've seen it a lot in the industry here, and it makes it hard for the legitimate ones like us because everybody thinks everything's a scam. And it's hard. You guys out there have to know the questions to ask. If they say 100% financing, or they ask for like a broker asking for an upfront fee, an application fee. Okay. If it's a true broker, they're not going to ask for anything up front. They're going to get paid out at close through escrow. Okay. They're asking for an application fee of $200, $300, $400, $500. That they're going to call it an application fee, or they're going to call it a due diligence fee. They want to be paid for their time that they're doing there. And more than likely, your deal's not going to get closed. Or if it does, you're still out to $300, $400, $500 because it's not going to come off your closing costs. And on some that I've seen terms come back where they're asking for a fee, in the beginning, it says, it's non-refundable. So basically, when somebody's asking for a fee, they're making your money up front on you. And on some cases, like we had one, where they said they could get it done, but they wanted 1% of the loan value paid up front, but it was non-refundable.
It was I wanted $70,000 up front.
Yeah, $75 up front, and it was non-refundable whether the deal get closed or not. Now, when you see something like that, more likely they're trying to make their 1.1% on you before the deal is even closed because they're not sure if it's going to close. But they make it sound like everything's all great and everything else, but they want it wired to them, not into an escrow account or anything else or holding. It goes straightly to them, to their account. I would tell you to stay away from there. Now, there are exceptions to that rule when it comes to specialty loans and certain hard money lenders, because they're putting up a lot of the risk, but their fee that they have you put down there, it's like the SBA and stuff like that. It's a deposit, and it goes towards your closing costs at the end. It's all spelled out, and it goes to an escrow account to be held there. And if something doesn't work out, you'll get your money back. but some people do require that are legit, but it would be spelled out in the contract that you're going to sign or the agreement you're going to sign along with the term sheet. And the term sheet will show you the deduction of, say, if it's $1,000 or it's $500, you're going to see it saying there, what your fees are minus your deposit of $500 or the fee, whatever they may call it, is deducted right there on the term sheet.
Exactly. Now, one thing I really want to touch on is why, everyone traces max loan to value, and it's just really risky. Because let's just say you're doing a fix and flip, right? And you have it all there, and you try to go 90% loan to cost, or that, which is fine, but the problem is if you set it up like that, and let's just say you're going to be able to get the construction done on this project in 6 months, and then you want to put it on there. Obviously, you're going to take like a 6-month loan. But what happens if you put that on the market and all of a sudden the market dips a little bit and it takes double the time to sell it? So instead of selling at 6 months, you're selling at 12 months or even longer. Then you don't have the extra leverage there to make your extra profit, because then it's going to eat into your profits. So, you don't really want to have max LTV. So Mickey, on max LTV, using your military background, what's your military take on why people shouldn't use max loan to value, and be careful in that instance?
Oh, it's just like you said, David. I mean, from my experience from the other businesses and my military background is you want to leave yourself some wiggle room. Okay, in case something does happen. If you take everything to the max, you got no wiggle room. So if something goes awry, it's all coming out of your pocket now. You got nothing to fall back on. Okay, now you're struggling to either get it refinanced or into a DCR loan, depending on what kind of property it is, or you're scrambling because you got a balloon payment up here now. So you want to be careful when you try to get the 90% or the max on your loan value there, because it can hurt you more than it can benefit you. Because the market it goes up and down. It's not stabilized to where you can say, okay, I got 90%, I got enough here for this and that. It's not there right now. So my advice to you is take the hit up front and get 80 or 85% instead of 90% or 95%. Give yourself some wiggle room. If you do go for the max loan to cost, then make sure that you have some money put aside in case something happens. Build that interest reserve in there. I found this on the web so you have a cushion, instead of getting foreclosed on because you can't make your payments.
Yeah, you always want to, like a sweet spot really is 70, 75 loan to cost or loan to value. Everyone wants to use OPM, which is great, which I advise you to use, private money. But you always got to make sure that you don't over leverage yourself and have reserves. Reserves are one of the most important things. I've seen so many people come to me saying, oh, they want 90% loan to cost or loan to value, but then they want all the closing costs, they want the points, they want the interest reserve inside the loan. Well, then you're just paying interest on your interest and on the points, and it's better to just take the hit, save a little bit of money up, or even bring a partner to the table, and that way you can share the risk and also share the responsibilities. When you're doing a fix and flip or you're doing that, the way to scale really is by having a business partner. So, Mickey, if you want to touch on that real quick, and then we're going to go into upfront fees.
No, it's just basically like what you said there, David. The loan to cost and the LTV, you want to, take a look at your numbers. I know up front you're saying, I want all this for all the money and stuff like that. If you do your max there, make sure you put some of the money off to the side. Put it into a savings account, put it into a different account. so you have a cushion. Don't go out there and spend it all right away on there, because come push to shove, if you can't offload that property, right away like you planned on to, you have to have a contingency plan. Not saying that you won't get rid of it like you said you were gonna, or if you're turning it into a long-term rental and going into a DCR, that's fine. You can get to that max and refi or go into a DCR loan and take it out for, the next 30 years. But you always have to have a contingency plan in case something happens. That's why most private money lenders in this industry, regardless of which category you fall in, they're going to ask you to see interest reserves, and they're also going to ask to see your exit strategy to make sure it sounds realistic, and doable. Because if you don't got a good exit plan, they're not going to touch you. Don't matter how good the project is, but if you don't have an exit plan, they're not going to touch you if you can't exit out of it.
But the biggest thing I just want to wrap up on that section is make sure you don't fall for the 100% funding scam. It is too much out there. People are pushing it, and people fall for it all the time. And it does tie into the next section, which is upfront fees, because if somebody does offer you 100%, they are going to ask for an upfront fee. So what we'll touch on now is the difference between, real upfront fees when they're okay versus scam commitment fees. So, real upfront fees would be like an appraisal, but that's paid directly to the appraisal company. For a residential house, you're looking at $300 to $600, maybe $800 at the most, depending on if you pay for a rushed appraisal, you might have an extra couple $100. If it's a commercial property, you could be looking anywhere from $2 to $12 grand, but that's paid to the appraisal company. And then, if it's a specialty loan or SBA, like Mickey touched on earlier, it goes into an escrow account and it's refundable. There's a contract. But what I see, and I've seen it multiple times, where they offer you terms that are too good to be true, or something, but then they ask for a $10,000 insurance fee, and it goes to an insurance account or wired to their account. And in all reality, you're never going to get that money back. So if you are going to pay for any upfront fee, make sure you have a real estate lawyer look at it. But the one fee that I always tell people definitely don't do, is I've seen it multiple times, is you have these big funds or big firms or a broker, and they ask for $10,000, $5,000, or whatever up front. But what those firms are doing, or that broker's doing when they're doing that, they're just going to be shopping your loan around, and they don't actually have a lender. Sometimes they don't even have a lender. They're just going to be shopping. And those firms most likely are not going to get your money back because they've already spent it. So, Mickey, in your opinion, when is an upfront fee okay? And why would you stay away from them most likely?
Okay. Well, the only upfront fees that are okay with me is like SBA, and some of the ones out there that are for specialty loans. When you're coming into equity, when you're coming into a group that does this certain specialty and it's spelled out, showing that this in the contract, that it will say it will be coming off at closing, and make sure the company that's asking for it, even the specialty loan stuff, are real and legit. Okay. Those are, and usually with the specialty loans and stuff like that, that's to cover the legal fees and everything else for the underwriting. That's usually what that is there, especially when you go into the equity play. They need all that, and like for the bonds and stuff like that, because that's going to take a little bit of while, and it's going to take some doing. Okay. I see, since I've been doing this, is I see applications fee of $500, $499, $299, $1,000, and a couple thousand. They say it's an application fee, or it's a due diligence fee to make sure that you're committed. You know, not the broker, but you as the client are committed to see this through. That's bullshit. I'm just going to call it out the way it is. That is just BS. They're making their money up front on you, right up top. So why do you got to pay an application fee? Okay,
Or
a true consultant or broker will take. They only take it on because they know that they can get it done. If you got a true legit broker or consultant, they know what they can do, and they know what their investors or lenders can do or what's in their wheelhouse. If they take it on, they're looking to get paid at the end. Okay. But if somebody asks for your money up front, I'd say thank you and move on. When you talk to people, whether it's a consultant broker, don't be afraid to ask questions. Just like when we get people, we ask questions. If they can't answer the questions or they seem wishy-washy or can't answer the question or try to BS around the question, we say thank you. Have a good day. Because we're not going to waste our time on it either. If you can't answer the certain questions, now if you need help with it, we'll help you with it and structure it the right way. But we don't ask for any money up front. We do it so you get funded, and yes, so we get paid, but we also look on it as a long-term relationship. Customer service, if you want to call it. We want you to come to us for just more than one loan. We get this done, we help you structure it, get it done there. Next time that you need a loan for an investment property or project, you're going to come to us because we treated you good and we treated you fair and stuff like that. That's on that there. I mean, if there's fees involved, I would look at it quite heavily, and if you're still not sure about it, go to a real estate attorney. And most of them, you can usually get your first one free. They'll take a look at it and say, yay or nay. Now, in this industry, they say lawyers kill deals. They can, but, it's better to be safe than sorry, and get yourself into a predicament. If someone questions you taking something to a lawyer, say, have a nice day. Because nobody respectable lender or even in the private industry would have any heartache about you taking it to the lawyer. If they do, then they're not true or they're scamming you. Because nobody in this sector has anything hard because the lender itself has their paperwork drawn up and looked over by lawyers to protect their backside, when they loan it to you. So you doing the same thing shouldn't, hurt them at all.
No, the biggest thing that I like, if someone's pressuring you, especially there, that is definitely a scam. Biggest thing is, but yeah, like Mickey said, you always got to have an attorney review any contract that has any kind of upfront fees. But I'll tell you what, if you're especially a newbie investor or someone that has a few projects done, and you're just trying to get a fix and flip loan or a DSCR loan or new construction that's maybe under a couple $1 million, and anyone's asking for an upfront fee, that's ridiculous. They don't need an upfront fee to look at the project. They don't need an upfront fee to underwrite it. That's bullshit. That they're trying to scam you and get their money up front because they know they can't get the deal done. Me and Mickey, as professional consultants, we make our money at closing through escrow. We don't take any money, not even a penny, to look at your deal. We will structure the deal for you. We will walk you through it, not just from beginning to end, but even afterwards. We want to make sure that you're happy and everything. But again, yeah, if anyone is trying to pressure you and saying, "Oh, you have to sign this by Sunday and wire the fee by Monday, otherwise I'm walking, or you can't look at have a real estate attorney look at it. Thank you. Have a great day, because they are just trying to get your money. They're going, once you wire that money, they're going to either vanish or keep giving you fake approvals. And then you're just going to lose the property. You're going to lose time. You're going to lose money and self-respect. So I would never, ever pay an upfront fee, especially on just a regular project, unless it's specialty, SBA, or something else. The next thing I want to just touch on, I think, Mickey's kind of touched on already, is application fees. Um, those are most likely bullshit. Nobody needs an application fee. It's ridiculous. I mean, Mickey, you want to go over that time we saw someone, we heard about it more, where it was this group, and we won't name the group, but they basically gave a term sheet. They went to them for a project, and there was a couple projects talked about, and they gave the wrong term sheet. And then when that same client asked to get another term sheet, they just said, "Oh, pay another $500." Then, Ricky, you want to touch on how that kind of went unfolded? Remember, it was,
Okay. On that particular one there, we got the wrong, like David said, we got the wrong term sheet for the wrong property.
well, the client.
And then when we went back to the individual and said, this is wrong, this isn't the right term sheet for this right project, that's a red flag right there. But in order to get another one, they wanted them to pay another application fee of $500.
That's not underwriting. Okay. That's just
no, that's just the application fee. And to pay $500 for every application you put in with them, in my book, is ludicrous. Because this one particular client of ours, he has several projects going on. He'd end up paying probably close to $10,000 in application fees, because he is a contractor. He has several projects going on, and he's a builder. To pay $10,000 in application fees without even getting a term sheet, and not including all the other closing costs and everything else at the end, is totally ludicrous. If someone asks you for an application fee every time that you submit, run to the hills.
But in general, we don't, anyone that's asking for an application fee, it's just usually a scam. They're just trying to bill you $500 or $200 every time. That's why when the client told us about that story and asked if they should pay another $500, we advised them, no, never pay it for an application fee. So that's why the client learned his lesson, but that client was in a predicament, so he was kind of just being desperate. So once we found out about it and he told us that, we kind of, we told him to run for the hills, and we helped him and pivoted and got him funded somewhere else. So that's why you just want to be really careful. In this industry, it's not as regulated as you think. And there's so many lenders out there on Facebook and everywhere else. You just got to protect yourself. And a lot of people, tell us, oh, we don't want to pay for a consultant. We don't want to pay for a broker or this and that. And I get that, because there's a lot of joker brokers that just shop your loan to 50 lenders or whatnot. But if you get a good consultant like Mickey and I at Prime Haven Capital, we know the lenders that are real. We know the lenders that go well. And you're paying for the real service, because a lender is not going to walk you through everything. And it's much better to have a consultant, walk your project through. So, Mickey, you want to touch on just that one quick point about how using a broker and a consultant, if they're a good one, and kind of what you see are good markers to know if you're dealing with a good broker or consultant, and what they can really do for you.
If you're dealing with a good consultant, and some brokers are brokers/consultants, if you're dealing with a consultant, they should be able to help you structure your deal so it looks appealing to the people that they already know in their wheelhouse. Same thing with a broker. A broker, if he's a good broker, will know the people that he's connected with. what they're looking for, and not shop it to 100 people or 50 people or 20 people. Like here at Prime Haven, we pride ourselves into, if you got a deal, and it's structured right, or we help you structure it, we take it to maybe about 2 or 3 of our lenders that it fits the wheelhouse to. So you as the client have the option of taking a look at least 2 or 3 term sheets and see which one best fits your thing. Okay. The people that are out there shopping it to everybody in God's creation, or go on one of them sites and plug it in there and see who picks it up, that's fine and dandy, but you got to remember, this industry is huge, but the investor pool and everything else, they all see what everybody else is seeing. You can sit there, a broker can sit there and shop it out to 50 people. And we send it up to one, and they say, "Hey, Mick, I seen this come across my email. I didn't really open it up, but I seen that, Sally down the road. I mean, Sally from this, lender and a couple other lenders, they went to them too. How come they didn't fund it?" It creates a lot of questions, even though there may be nothing wrong with your project, but they can see it's been shopped around, and their question is why didn't somebody else pick it up before it got to me? What's wrong with it? What's the underlying issue? And there may not be an underlying issue, but it looks like it because it's been shopped all around and nobody picked it up. If it's such a great deal, why didn't somebody pick it up? Okay, so you got to watch out for that. And what we call by joker broker is they're going to get some of the information from you, and when they deal with, like, we have brokers that come to us with their deals to help get them funded. When we can't talk to you, the client, it makes it a little hard, because now we got to go through another third party in order to get to you. And as you know, just like you learn in high school and stuff like that, as information is trickled down, by the time it gets to you, it could have changed quite a bit, or they forgot to ask you something. Okay. So.
Or the lender lies to, has a lie that they say to that lender or consultant because they want to not share all the information.
Yeah, they don't want to share the information, and we're not here to steal anybody's clients or anything else. I don't care if it comes through a broker or it's direct from the client, the lender. I mean, the person seeking out the money. We as consultants and as investors, we need to speak to the person that's looking for the money. We don't always have, we don't need to talk to the broker or anything else. They're already listed on there as your broker or consultant or whatever. Now, whether or not your broker gets paid out at escrow or you pay them, that is between you and your broker.
Or we pay them.
But that's between you and your broker. And when we speak to brokers, we ask them, okay, for your fee, is your client paying you the fee, or are we building that into the loan? Okay. And then we proceed from there. But as the client, you're well aware of what's going on. You don't get hit, at least with us, you don't get hit at closing saying, you got to pay this person, that person. Or now the points went up from 2 points to 8 or 12 points, because of whoever's involved. Okay. I've never seen anything go up to 12 that we have done yet so far. But people like to tack on little fees here and there. And as we get term sheets back, before it goes to the client, we look at it to make sure there's no bogus fees in there. Because if there's a fee in there that we don't normally see, me or David will be questioning, and your consultant and your broker, if they look at it, should be questioning, saying, what's this fee? So we can explain it to the client if we've never seen it before and it makes sense. So you always want to take a look at stuff. Just don't look at the bottom line. And when you get a term sheet, actually look at the term sheet. Besides looking at it, okay, I'm getting 85% loan to cost. I'm getting an interest rate of 9.5 or 6.5. Look at what you got to pay out at closing. That's your magical numbers to make sure that you can do the closing costs. Just don't look at the bigger numbers saying, okay, yeah, I'm going to get 150,000 on this one here. I'm getting what I asked for. Look at what you got to put out at closing and what fees you're paying. Because yeah, you're getting that money, but if you got to pay out $40,000 in fees, you're not really getting your 150, are you?
No, you're not. And so, I want to touch on, a good broker, consultant's going to make sure your deal is good and also go over the term sheet, make sure they pick it up. And, like Mickey touched on, you don't want to be shopping your deal to 50 lenders. Even if you're just independent, not going through a broker. You don't want to just send it to, I'm going to get this term sheet and then go to another lender and see if I can get a better term sheet. No, because you keep doing that and enough, and then your deal is just going to die. So you want to protect your deal. That's why going through a consultant and a broker, a good one like us, is very, very helpful, because they can protect you. They know the legit lenders and they know what's going on. So, just a little recap from what we went on here today. 100% financing is a myth. Do not fall for any scams. They're to draw you in, or they a scam. Legit lenders do not need big upfront fees, and application fees, do not pay them. 100, like if they need an application fee to do a fix and flip DSCR, especially for newer investors, that's ludicrous. Do not pay those either. And also, max loan to value is dangerous, not helpful, because it's just, you're going to hurt yourself in the long run. Save more money, bring a partner in, and save your deal. Nikki, you have anything else on the recap you want to go over before we kind of wrap up here?
No, I mean, you basically said everything there, David. Just don't be afraid to ask questions when you're talking to somebody, a broker or a consultant or anything else. Don't be afraid to talk to them. Ask them questions. If there is a fee involved, ask them why the fee and everything else. My advice to you, if a broker is asking you for an application fee and stuff like that, I'd walk. Because there's too many people out there that won't charge you a fee. And more likely, the fee that you pay, you just paid that gentleman's salary for the month. Okay. And you're not getting it back. So always make sure you know what you're getting into. And don't be afraid to talk to a couple of different people. The ultimate thing is whoever you feel comfortable with is who you want to go with. And I would also add to it there is when they start asking for finances and stuff like that and everything else, I would have them sign an NDA. Because that's a lot of personal information. I mean, in the beginning, to see if they can do the deal or not, an executive summary narrative and a description of what you're looking to do, that's fine. So they can actually see if they can do the deal. Like if they want to know how much is the purchase price on the fix and flip, how much you have it under contract, see the contract, what it's going to do for the rehab, how much it's going to cost for rehab, what's the ARV afterwards. Stuff like that is common knowledge and it's open to the public. But when they start asking for personal financial statements, stuff like that, have them sign an NDA. Okay. That way your information is protected. They just can't take it and send it to everybody, Tom, Dick, and Harry.
All right.
That's it for me. I mean, there are exceptions to the rule, for everything, but just be careful. There are a lot more scammers out there than there are a lot more legit people.
Awesome. Well, we will be back next week. We're going to be producing an episode a week. We'll have some good guests on. My father will be on. A couple other real estate investors will be on in the next couple weeks as well. But in the next week and a half, 2 weeks, the book will be out, which will be a intro book to private money and everything else. And shortly after that, the course will be out. And it really takes how to spot scams, how to structure deals, underwrite like a lender, and then the course is going to go even deeper, and it's going to really help new time investors. So subscribe, share this with somebody in real estate. Stick with us. We are going to be pulling back the curtain on the industry. A lot of people don't share this information. It's going to be free. We're also going to be producing every day on Instagram, TikTok, LinkedIn, Facebook, everywhere, including X. We'll be on breaking some myths, some free content on social media. Mickey, what do you want to say on the book and the course and social media?
Well, on the book, I would tell you to purchase it, read it. Knowledge is always key. The more knowledge you have, the better off you are. The course, I would tell you to subscribe to the course, and again, knowledge is key. Learn the different stuff. And as you read the book or if you subscribe to the course, there'll be links in there to where you can talk to us directly if you have any questions or our guest speakers and stuff like that. So, I would tell you in this industry, more knowledge is the key to everything. The more you can learn and the more people you can talk to that are legit and have the experience in this field, it's just going to make you better for your deals. Or if you're an investor or looking to get into it, it'll show you the do's and the don'ts on it. Knowledge is always key. Doing is always a lot better, but you want to make sure you do it the right way. You don't want to lose money. You're looking to make money.
Perfect. Well, yeah, subscribe, share this with everyone in real estate, subscribe to our social media, and we will be back next week. And I hope everybody has a great week and a great weekend. And have a good night. All right.